Welcome to DIY Finance Hack. My name is Eddie, and I work in corporate and a passionate part time investor. I started investing in properties from 2009, and 2 years later, I started investing in individual stocks, then high dividend paying stocks, and LIC before I discover ETFs. I'm here to share my investing experiences, ideas, and mistakes to make you wealthy with some fun. You'll see some of my videos featuring my pets, favorite places, and things to do. Let's go through properties versus shares from a non biased view. It's a non biased view because I don't work in banking or finance, and I don't have any affiliation with any real estate company or fund managers. I've been a property investor and share market investor for many years. And I do lots of reading and research every single day. And I love doing it. My view is all based on my experiences and learnings from my own mistakes. To do this analysis, I've started doing a spreadsheet to compare the past 10 years gain between property and shares. But then I realized it's very, very difficult as there are lots of variables and assumptions. Variables assumptions such as the type of property, the location, the type of shares, and the shares strategy. And also bear in mind, income to property price ratio is a lot higher today than 10 years ago. So it's very difficult to compare. If I look at the overall picture, it's a tie. It's definitely a tie. You just have to look around. There are lots of people made their wealth using properties or shares or by having both. Now, the best way to do a comparison is by looking at the pros and cons, which I will share next. Let's look at the pros and cons investing in properties and shares. Let's look at the pros for properties first. High leverage. What do I mean by high leverage? You borrow lots of money initially, and 10 years later, hopefully, your property will double in price. It means you will build lots of equity and you can use that equity to borrow more money. Look, I'm not an advocate of borrowing lots of money, but this is something that you can do. The bank will allow you to borrow more money because house is deemed as a less riskier asset than shares. Even if you have lots of shares, even if you have high paying dividend shares, the bank deem that its shares are more riskier than a house. You get around about 7% capital gain per annum. That if you invest in Australian capital city. So 10 years later, your house will double in price. Because property price is high, so you need to borrow lots of money to begin with. And 10 years later, if your property doubles in price and you decide to sell your property, your capital gain will be high as well. Let's go to the next pros for properties. You receive monthly or fortnightly rental income. Some of the property agent uh, do allow you to get fortnightly rental income, which is great. And there are tax advantages in negative gearing. But do remember, negative gearing means that you are making a loss. Now let's go through cons for properties. large initial cost. So we all know this. We have to save a lot of money for a house deposit, and plus you have to pay stamp duty as well, especially if you want to invest in the Australian capital city. And your loan is large as well. Now the cons is high cost of managing the property. So this can be quite stressful. You have to pay your agent fee and all the repairs. I know that one of my investment property do have mold issues, and yeah, obviously we have to fix it. We have to install one of those whirly bird on top of our roof for better ventilation, and we have to reduce rent as well. And another recent event happened in one of my investment property where the bathroom shower waterproofing decide to fail. So there were water, so water went through the other side of the wall. They have carpet, so there were water all over the carpet. Had to get that fixed and need to repair the bathroom. And it takes about a couple of months. And also we have to reduce rent. And what's worse is my insurance company didn't want to know about it. Plus cons is it takes time to buy and sell. We haven't sell one yet, but it does take time to buy. I think it took me about a year to get an investment property, because what happened now is that with houses in Australia, they go through pre-market first. So the agent have a list of buyers, and they open house to those list of buyers initially before it gets to the open market, and then finally it goes through auction. So all of the houses that I've seen goes through auctions at the end. There is one though uh, that I saw during pre-market, and for some reason it didn't go to the open market, and I reckon the seller decided not to sell their property anymore. And I do remember 15-20 years ago, when you want to buy a property, you don't have to go through auction, unlike today. Let's look at the pros and cons for shares. Let's go through pros first. All you need is low amount. You can buy $1,000, $2,000 a time, and you don't even have to borrow lots of money. It is easy to buy and sell. You open up a brokerage account. For example, I use NapTrade. Um, you send money across to the NapTrade trading account, and you can start buying and selling during those business hours. You receive distribution or dividends, which is great, which means that when you invest in shares, you will get the benefit straight away. I always describe buying shares is like getting more income without having to ask for a pay rise. With shares, you do get around about 8% plus. I put a plus there, return per annum. If you invest in the Australian share market, and if you invest in the US as well, you will get 8 8% plus return per annum. Let's look at the cons of buying and selling shares. You do need to spend time doing research and analyzing. I do this on a daily basis. The other one is you got to pick the strategy. Um, and picking the right strategy, it is a hard one because there's no right or wrong strategy. And over time, as you progress, you may need to change your strategy, particularly if as you get older. And of course, you need to rebalance and you need to find that right strategy as well. But once you know the strategy that you pick, it will become easier and it will become automatic for you to invest in shares. So, what's the conclusion here? Invest in both properties and shares if you can. I understand that the upfront cost of having a property is very high. Start investing in ETF as early as possible and use that money to buy your own property to live in. Having your own property gives you a sense of achievement and security, and at the same time, build your ETF's portfolio. Thanks for watching. Please always do your own research and happy investing.